Доброго дня, шановні колеги. Раді всіх вітати на міжнародному науково-педагогічних стажуваннях, які проводяться Балтійською міжнародною академією. Зараз нас 19, але всі бачили, які новини в Південній області засипані в Україні, тому не у всіх є світло, є інтернет, тому нас буде сьогодні трошки менше, але ми, як ви бачите, робимо записи обов'язково. Тим, хто не зміг приєднатися, буде надіслано відеозапис з закритим доступом на можливість прослухати лекцію представника Міжнародної Балтійської академії. Міжнародна Балтійська академія є партнером Центру українсько-європейського співробітництва вже на протязі 5 років. Академія утворена на початку 90-х років, саме з моменту того, коли Латвійська Республіка вийшла з Радянського Союзу. Відповідно, почався рух розвитку саме приватних закладів вищої освіти. Це один з провідних закладів у Латвійській Республіці, саме серед приватних. І ми дуже раді, що налагодили тісну співпрацю. Центр українсько-європейського співробітництва постійно проводить спільні стажування, колективні монографії, підвищення кваліфікації. А також я дотичний до видавничого дому Гельветико. Ми є видавцями Балтійського журналу юридичних та соціальних дисциплін, який, до речі, на минулому тижні, з чим ми вітаємо Балтійську міжнародну академію, був включений в базу Еріх+. Я не буду забирати багато часу, розумію, що у всіх понеділок, велике навантаження зранку, тому з задоволенням надаю слово сьогоднішньому лектору, доктору економічних наук, доценту, професору Балтійської міжнародної академії Юрісу Балтгайлісу. Юріс, please speak.
Morning, dear friends. I'm glad to see you at the same time. My election today is I try to explain the situation what create with the currency, digital currency. Christine Lagarde, it's president of the European Central Bank, promised us to introduce digital currency in October of this month, of this year. But you know, now it's November, but nothing to create the situation, not change, not since. The same situation in China, who was where is the first try to introduce digital currency. The situation is the same in another country. Maybe you know, but 113 countries try to introduce digital currency in his economical life. Yes, and why it's problem, what connected with the model situation, I try to explain you. First, we quickly make history trip to cryptocurrency way. The first, you saw, the first, it's coronavirus crisis has confirmed the growing dysfunctionality of the current system of regulation of international monetary and financial relations. When an unlimited supply of money does not lead to a solution to the accumulated global social economics problem. At the same time, the market hype around crypto assets is helping to promote the idea of launching sovereign digital currency, which may bring some adjustment in the growth of model based on credit money. Over the past 10 years, the creation of mobile money from digital platform has enabled integration of more than 1 billion new users into the financial system who previously did not have access to bank accounts, creating an inclusive financial system. Inclusive economy, it's a very interesting name. And in future, I repeat, maybe you, what is it, inclusive economy? Privately issued digital currency poses a threat to the implementation of monetary policy by central bank due to the emergence to parallel money circulation. Netting regulation cannot fully control exchange rates and influence the money supply. China, for example, recognizes the property nature of both virtual and digital property, what is has a de facto implemented to international legal conceptual conceptual, just a moment, I know to see some of the problem. Property, what is, has de facto implemented the international legal conceptual apparatus, but eventually banned the distribution of the virtual currency. You see what the first who banned virtual currency was China. It's the reason I explain next time. Resilience to fluctuation in the exchange rate of stablecoin is achieved by linking stablecoin to various instruments, including fiat currency, precious metal, digital currency, or by replicating on a decentralized basis some elements of monetary policy used by central bank. For example, stablecoin don't have so big volatility. Some such Bitcoin you see, and stablecoin often use IT corporation. It's have a possible to convert in dollar or euro, use on legal tender, fixed price, stable as a collateral standing behind. And I explain about a stablecoin. This is the most common variety of stablecoins where value is usually backed by the most popular currency, US dollar, euro, pound sterling, and others. When converted such stablecoin, the organization what manages them exchange fiat currency for stablecoin. In this case, the equivalent amount of stablecoin is destroyed or withdrawn from circulation. For example, what the cases of stablecoin? It's, for example, Tether pegged to the US dollar and holding 75% of the stablecoin market, is the fourth largest cryptocurrency by market capitalization and has a higher daily trading volume than any other cryptocurrency, including Bitcoin. USD coin is also pegged to the US dollar and is gradually increased its market share as a 21 year to share. Its share was 15% of the market. Visa is launched a project to issue corporate credit cards based on USD coins. And there are other stable coins on the market backed by fiat currency of the world. For example, XSGD is pegged to the Singapore dollar, Euros is pegged to the euro, Candy is pegged to the Mongolian tugrik, and others. Problem what it's a collateral for this currency. But stablecoin have some problem. Algorithmic stablecoin may or may not hold reserve assets. Their primary distinction is the strategy of keeping the stablecoin value stable by controlling by its supply flow in algorithm, essentially a computer program running a preset formula. In these cases, it is a problem of the currency what depend from the algorithm. Tether USD processed 18.2 trillion in transaction in 2022, placing it here to traditional payment processes like Visa and MasterCard. In comparison, MasterCard and Visa processed transaction worth 14.1 trillion and 7.7 trillion. You see, it's more bigger when across the transaction MasterCard and Visa. Tether remained the king of the group with 47% market share and 66.3 billion USD circulation. Cycle is second with a market share of 31% and 34.3 billion of USD coins. Combined, the pair make up almost 18% of the entire stablecoin market. However, both have seen their circulation supply decrease this year as the bear market beat is deeper. However, there are difference between the credit card volumes and stablecoin settlement. Credit card transactions usually indicate consumer spending, whereas fiat-pegged crypto assets are primarily used for crypto trading and decentralized finance. And it's some of the instruction and regulation documents of European Central Bank. What say was the increase in central bank digital currency remuneration. Yes, rates has two effects in this model. First, makes interim withdrawal more attractive by increasing the payoff from the storing funds in CBDC for future consumption. This direction effect makes the bank more fragile. It's connected with the problem connected with the central bank digital currency. What promised us to issue Central Bank of Euro, and the same Central Bank digital currency promise issue Federal Reserve System of United States, but not issue till time. The same China not issue the digital yuan, but the name of its digital yuan, like euro, like dollar, will be central bank digital currency. And the interesting position what central bank digital currency higher remuneration induces the bank to offer more attractive deposit rates because consumer would otherwise not provide any funding. As a result, consumers have lower incentive to withdraw their funds. This indirect effect renders the bank more stable. It's idea of central bank of European Central Bank. But in these cases, you see what the all deposit from the commercial bank have a possible to allow the central bank to pull deposit from the commercial bank. Stablecoin, it's a fragile currency. Packs what diminish their utility in transaction, and central bank digital currency are a solution in such a problem. Modern fiat unsecured money exists in two forms: cash issued and guaranteed by central bank, and non-cash issued and guaranteed by the commercial bank, as the expenses of deposit and depositors. Conceptually able to combine both of these forms. Unlike the spontaneously formed value of cryptocurrency, the value of equal to the value of national currency, the maintenance of which is guaranteed by the central bank of the relevant jurisdiction. And Christine Lagarde, president of European Central Bank and the European Banking Congress, said what the central banks are responding by advancing the development of central bank digital currency. This currency could give banks a tool to offer improved product services, build the stable foundation of digital public money. You see, it's a promise very interesting because in these cases, I think it's the case will be the same in China, where is abandon all private digital currency. What the central bank digital currency will be stable. Now, 113 countries represented 98% of global gross domestic product are exploring of CBDC. In May 2020, only 35 countries were concerning CBDC. A new height of 64 countries are in the advanced phase of exploration, development, pilot, or launch project. 19 of 20 G20 countries are now in the advanced stage of CBDC development. Of those, 9 countries are already in the pilot project. Nearly every G20 country has made significant progress in invested new researches in this project over the past 6 months. 11 countries have fully launched digital currency. China pilot, which currently reaches 2,060 million people, is being tested in our 200 scenarios, some of which include public transit, stimulus payments, and e-commerce. It's very interesting cases what explain how to some country try to introduce its digital currency. Very famous English economist John Lucas explained, maybe you know about procedure what use in the Central Bank of European country and federal system in the United States use the procedure with name QE, quantitative easing. What is it? What quantity is easy? It's a printed money. It's a printed money, electronical cash and hours. This leads, but John Lucas study, it's a process and explain what this leads to higher unemployment, depreciation, capital goes to foreign markets. And we study what the European country, for example, with the United States, it's G4 central banks, what included the United States, Eurozone, Japan, and the United Kingdom, to create a inflation bubble with the measure 3.5 trillion of dollar using of this procedure of QE. It was 10 years ago. Now it's inflation bubble. It's 9.1 trillion of dollars. Yes, it's a tremendous bubble, tremendous problem connected with the inflation, because all of the printed with money, but it's money create inflation, it creates some problem connected with our economy. It's a picture represent some problem connected with the printing of money. You see what the last 10 years, all time, all G4 countries growing to printed money and invested in economy. But what help us the digital central bank digital money? The first, for my opinion, I studied some documents of European Central Bank. It's connected with the cutting of inflation. Cutting on inflation. You know what, in these cases, if it's issue some of the digital money, it's Central Bank of Europe, European Union ready to open till half billion of account. Half billion of account. It's, I repeat, Central Bank of Europe. It's not Commerzbank. It's ready to open this account of Central Bank of Europe. And all our transaction will go across the Central Bank. The same in the United States. Deposit based on Central Bank digital currency seems simpler and can protect better against money laundering. Yes, it's easy. It will be easy because we have a possibles to check all transactions in Central Bank, not needed to go to a Commerzbank and look for a problem connected with the laundering money. And because all this transaction you can show in the Central Bank of Europe. It also seems to allow for a high level of security and control of their circulation amount of CBDC based money legal status and or some minimum criteria of payment or economic activity. The central bank could offer a digital token currency what will circulate in a decentralized way without central ledger. This is often associated with the anonymity, meaning what the central bank will not know who currently holds the issued token, like the case of banknotes, but it's the same will be electronic currency. Electronic currency. And I present you the modern system of bank. It's a two-tier banking system, you see, yes, and it's connected with the fiat money. It's non-secured money that issue in our countries, yes. You see what the customer, it's a blue customer, have a possible to open account and saving deposit in Commerzbank, Municipal Bank, Industrial Bank, and ours. They open account and make some transaction across the Commerzbank. Commerzbank open correspondent account in Central Bank and execute this transaction across the Central Bank. It's what connected with the local money, local transaction. But in these cases, now customer have a possibility to open digital wallet and make a transaction in Bitcoin, stable coin, and ours private currency on the system of blockchain. You see, I see it's a democratical system. You have a possibility to make some transaction across two ways, across the Commerzbank and across the system of blockchain, across the digital wallet from one to another customer. Yes, and it's a system with name two-tier banking system. If you want to make an international transaction, you use system of SWIFT. It's international system of transaction, and it's possible to make some transaction in different currency all abroad. It's a modern system what we use now. It's a very interesting proposal what was issue of Jonathan Macmillan 10 years ago. He write in his book The End of the Banking in 2014. Today is becoming clear what with the rapid development of a digital financial system consisting mainly of private cryptocurrency, the subject of regulation will disappear for central bank. It's right, because if we close all commerce bank, but its commerce bank is so much in each of country. For example, in Latvia, 20, maybe in the Ukraine, it may be 100 commerce bank. But you see what in the new system with the digital currency, with first central bank digital currency intermediary in the face of commerce bank are absent. It's disappeared. You see what in 2022, the volume of cryptocurrency transaction for Bitcoin was in 14.1 trillion, for Tether 18.2 trillion, yes. But MasterCard and Visa is smaller. And the state cannot ignore such facts. The first who to take end of its ignoration of this position was China, where it's abandoned all of private cryptocurrency. And now they use only central bank digital currency. You see what the payment and settlement operation and non-cash circulation are based on the system of interbank payment. Digital currency of central bank, as the name suggests, assume the existence of monopoly of central banks on their issues and make it unnecessary for commercial bank to multiply the money supply. In these cases, the central bank will be creator, operator, and custodian of the pool of digital currency. Yes, and without banking, the need for large-scale regulation of bank disappear. The issue is also not obligated to save the state quantity easing, which often stimulates large-scale cost, inflation, corruption, and creates condition for bankruptcy. Citizens and this condition are protected by an unconditional income and price stability. In the future, such a system may lead to the fact that central bank will provide the non-financial sector on the economy not only with settlement, but also with credit and deposit services. This will make the traditional business model of bank uncompetitive, and therefore many of them are already actively investing in system, ecosystem, and fintech system. It's connected, fintech system is connected with the money transaction in a different way. For example, PayPal and some of the transaction system would help us to make a transaction without using of commercial bank and central bank. The central bank digital currency used for electronic payments risk almost completely depleting the commercial bank network of deposit money, which can lead to a flight of money from the commercial bank and replace them with a super monopoly in the form of central bank. And I maybe repeat for you what under all of the question what appeared for you when you needed to receive some loan, to buy some securities, to maybe open some accounts, you needed to solve with the central bank, because commerce bank, like an intermediary, it's maybe disappeared. It's a reality. It's a not far reality. 3 years ago, the issue of parallel circulation of central bank digital currency, cash, and private digital currency was discussed. Now the models for introducing CBDC reflect the priority of this currency, with the help of which central banks plan to create a sustainable financial system. In our opinion, the unresolved problems with high inflation, convenience, what central bank are preparing to move a new system of macroeconomic regulation instead of quantity easing and interest rate procedure regulated by supply of the CBDC. Yes, it's very easy to regulate with the electronic money and with the fiat money what use commerce bank, and difficult to regulate commerce bank, but in these cases it's a problem. It's problem for us closed. And you see what the ECB instruction, right? Digital euro prototype summary and lesson learned. The use of the digital euro will come closer to the use of cash from a privacy perspective, and benefits could be achieved by relying on specialized identifier verification service provides who would ideally adhere of harmonized pan-European standard rather than relying of intermediary specific identified solution. For example, bank. Maybe you know, but in Europe is have a case, for example, connected with the Denmark, where is refuse from the cash, only payment card. In the case you have a trip to Denmark with the euro or dollar, you don't have a possible to change its money, because banks not change cash, not use cash, only electronic money connected with the payment cards. The same situation created in Sweden, and we feel in Latvia the same, because so much places closed where exchange rates magazine and our situation where is we don't have a possible to change money and use only electronic payment card. And in these cases, it's possible. I am not sure what it will be the situation, but I presented it's my opinion. What banking system in our country create the same picture. You see what the customer is blue, have accounts, all accounts in central bank, not intermediaries connected with the Commerzbank, yes. And in these cases, customer use some of the modern technology connected with the fintech system, using some of the clearing company, digital platforms, technical service, accounting, what connected with the new technology, where this company only help customer to create new technology and the service serve some of the digital money. And international transaction connected with the digital money. It's interesting question. I think what it's not solved till now, but I think the international payments from the common platforms. It's some of the country create some of the common platform in the digital money. For example, dollar and euro, dollar and pound, dollar and hryvnia, and our platform, what automatically will be change on this platform and transfer in next customer, to receiver of your money. Do you see what all saving deposits and our problem in this case is customer will be solved with the central bank, because central bank in these cases will be a monopoly who have a possibles to solve this problem. Good, it will be wonderful or bad. I don't explain you because it's only it's my opinion on this situation. You see what here the central bank operates the retail ledger. As a result, the central bank server and involved in all payments. This require substantial technical infrastructure to offer headroom capacity even during peak demand. On the upside, the system is very resilient as the central bank complete knowledge of retail account balance allows it to honor claims will be easy. The information needed for verification is ready available. The most substantial argument against the architecture is what it marginalizes private sector involvement. There are also hybrid schemes with settlement in CBDC, but there are intermediaries there, and I think that they will not be in demand in these cases. I told you only what I read in the instruction of European Central Bank. It's have a possibles to change fiat money on digital money on the exchange rate 1-to-1. Yes, it's possible or not. I am doubt because we have so much digital money. Only if we abandon in our digital private money, we have the exchange rate 1-to-1, because in our cases it will be market, and where in market exchange rate quickly change. And at the end, these new futures are the dream of any globalist. The first, control almost all accounts. Excuse me. Keep under constant control and receive direct information about money laundering. You see, the first very interesting. Control almost all accounts. Very interesting position. Fight inflation by putting money into circulation with expiration dates. Yes, it's very interesting position what developed European Central Bank, the same United States reserve system. What we receive so much, some money with the expiration dates. If you not using, for example, in 3 months or 6 months, it's money disappear. It's help to fight with the inflation. Quickly and cheaply carry out any monetary reform, included denomination. Yes, it's possible. Quickly denominate money without problem with the cash, where it's needed to exclude some of the cash, and change its cash and delivery cash to commerce bank. In this case, it's very easy to make denomination of money. To be an active research of political forces, quickly restructuring the financial and credit policy in accordance with their goals and objectives. Direct hidden support for the loyal business and restriction for disloyal owners. It's a very big danger what creates in these cases. And I don't know how to fight with this danger to fight. Actively use international settlements in favor of economical grouping without control by foreign institution. This means what information about transaction will not be able to go to the tax authorities of the states of residence of foreign users. In addition, foreign digital currency will be able to displace cash and non-cash national monetary unions, contributing to the imbalance of monetary circulation. It's a very interesting position. For example, Chinese businessmen have a possibility to go to Ukraine or United States and make transaction in digital yuan with iPhone on this territory without some of the tax control. Yes, maybe you know, because in the Arab Emirates now creates digital currency with name Emirates, and its Emirates will be used with the settlement and transaction with some countries where it's not stable currency system. For example, Somali, Sudan, and our country where is the working currency system. According to the creators of CBDC, the new system will create a stable, inclusive economy, helping build an economy what works for all, create more than, for example, 1 million net new jobs each year in the USA. It's a Janet Yellen, it's Minister of United States, would say, because you know, some of the people don't have account in banks, and all transaction execute in the cash. And in these cases, cash will be abandoned, and you have only one possibilities to make a transaction across the bank with the digital currency. Control the payment and the receipt of taxes using direct access to customer accounts. Carry out a direct audit with the instruction of tax and other supervisory institution. Yes, it's will be very easy to make some audits, procedure, because all transaction and his reflection will be in central bank. Just and at the end, for example, Robert Kennedy, who recently filed to run for US president in 2024 as a Democrat, shared this concern of CBDC via Twitter. CBDC tied to digital ID and social credit score will allow the government to freeze your asset or limit your spending to approved vendors if you fail to comply with the arbitrary dictates. It's included for him, it's the same like a vaccine mandates. Where is, you know, where is was a pandemic, we have some restriction, and he explained what the CBDC, the same creates some restriction for all of the citizens in the whole country. And the European Central Bank President Christine Lagarde recently fell victim to a prank call in which they unwittingly revealed what the European Central Bank digital currency will have a limited amount of control. She don't explain much about its problem, but we needed to understand what central bank in these cases, where is all account in central bank and using only central bank digital currency, have a possibles to control and check all our transaction. And for me, it's all. And I presented you some article. It's article I prepare with the some of Ukraine professor. And it's published in Ukrainian University of Sumy. And you have, if you have a possibles to study the same problem, you try to open this link, and you receive article about problem what I told you. Okay, for me all. Hello. Hello.
Yeah, thanks for very interesting information, Professor.
No problem. Thank you for your cooperation.
Thank you very much for the presentation. Do you think Kennedy's concerns have merit? Because otherwise he didn't seem like a very rational candidate.
What candidate? Just a moment.
Kennedy, you described him on slide 22.
No, yeah. You think it's a win or not win?
No, I'm saying, are his concerns rational? Because in his thoughts on other matters, he didn't seem like a very rational guy.
I don't know. I don't know. It's not for my opinion. I don't know. I read some of this article and some of his presentation, and for me it's very interesting because it's I think about the problem connected with the economy, But about his view, I'm not sure.
I have the question, Professor. What do you think? The digital money can create the dictatorship in financial sector?
In financial sector, in your country and all countries?
In all countries.
All the countries. 100 certain countries create now, it's a project, a pilot project connected with the digital money. And I think what it's will be because no another problem how to solve a problem with the connected with the inflation. It's a very simple problem to refuse from the fiat money because it's very high inflation and process of the QE, quantitative easing. It's create some of the money what not work. You know what Central Bank of Europe, Central Bank of in our country try to solve its problem to growing of the interest rate. But in these cases, growing expenditure of the business, yes, money become more expenditure. It's not solve a problem. We receive some of the tupik, of these cases, and only I think was much of the central bank try to solve its problem across the digital money, across the digital. The first central bank digital money. It's a monopoly. It's a problem for us, all of us, because it's connected with the difficulties of the transaction, difficulties of some of the position connected with the payment, and ours receiving of loans, receiving some of the other services from the Commerce Bank. You have some account in Commerce Bank and easy go participate in this. Not participate, but I hope we often go to the bank, have some conversation with managers, and maybe you understand some problem connected with your account. But in central bank, I don't understand how to explain and how it will be services all people, so much people. I am told you what the Central Bank of Europe ready to open $500 million account in the Central Bank of Europe, and how it will be transferred and how its services, for my opinion, it's very difficult. For example, China, I told you what China to create 200 experiments with the digital money, and all of these experiments not receive a good conclusion, because you see what the so much transaction, the equipment not possible to use in these cases. Because equipment, it's difficult to create with so much amount of the transaction.
Okay. Yeah, thanks for your answer.
Thank you as well. If I may ask another question, when we were registering for the event, I have received a letter saying that the topic of the lecture would be student-centered learning. Is this lecture still going to happen, or was it changed, or was the letter wrong? Thank you.
I don't know about this letter. Excuse me, but I don't know about this letter. I don't not write you this letter.
I think the organizer responsible for the communication, and
yes,
raise this question for organizer.
Yes, I'm simply lecture without organization on this situation.